Hello guys, you're welcome to this video. In this particular video, we are going to be talking about the MACD, moving average convergence divergence. We're going to be showing you, or we're going to be discussing the best settings for using the MACD indicator on the 5-minute chart. So basically, to get the most out of the moving average convergence divergence on the 5-minute chart, we're going to be looking at a breakdown of the optimal settings and how to use it for quick trades, how to catch good moves on the 5 minute time frame. Okay, now let us start by adding up our MACD to the chart. We can see that the default settings are fast EMA 12, slow EMA 26, and the MACD SMA 9. But for faster signals in a 5 minute time frame, traders often adjust the parameters to make the MACD more sensitive to market moves. So now the recommended settings for scalping or day trading are the fast EMA 6, the slow EMA 13, and the MACD SMA 5. Right? Now, these shorter periods make the MACD more responsive to price action, which is critical for quick trades in fast-moving markets like the 5 minute chart. So we're just going to load this on our chart, okay? And we're going to go to the 5 minute time frame. Alright, now how do you use the MACD to identify trends? The MACD is a powerful tool for spotting trend direction and momentum. Now here's how it works. When the MACD line crosses above the signal line, you can see this zero signal, right? The zero signal. When the MACD line crosses above the signal line, it indicates bullish momentum. When it crosses above this zero signal line, it indicates a bullish momentum, signaling a potential buy opportunity. On the other hand, when the MACD drops below the signal line or this zero line, it indicates a sell signal showing bearish momentum. Okay, now as for the histograms, the histogram shows the difference between the MACD line and the signal line. As it grows, it confirms increasing momentum. You can see as it grows, it confirms increasing momentum. So as the MACD histogram bars are increasing, it shows an increase in bullish momentum. As the MACD lines are decreasing downwards, it shows an increase in bearish momentum, as you can see reflecting on the price chart. Okay. Meanwhile, a shrinking histogram warns. When you see a shrinking histogram somewhere like this example, a shrinking histogram warns of weakening momentum. It shows that the momentum is weak, as you can see around here. The momentum was weak, so the shrinking of the MACD histogram bars shows weak momentum. But to time your entries precisely, you need to follow these steps. For the bullish signal, you have to wait for the MACD line to cross above the signal line. For example, let us look for a good example. You can see when the MACD line crosses above the zero line, as the MACD line crosses above the zero line, it indicates a buy signal. Ideally, when the histogram shifts from negative to positive. So after the MACD line crosses above the zero line and you see the histogram bars forming above the zero line as well, it's a buy signal. So you can enter your buy trade right about that point after the crossover and the histogram bars begin to form. And then you can enter your buy trade around there. You can set your stop loss below the swing low and then you can target the nearest resistance. For example, around here, there was a resistance here for your take profit, or you can wait for the MACD line to begin to curve downwards. Once it begins to curve downwards above the histogram bars, you can consider that as an exit signal. So at this point, we could have exited our trade around here if we are using the curving downwards of the MACD line, we would have exited around this resistance level. Now for a bearish signal, you might want to look for the MACD line crossing below the zero line and the histogram bars forming below the zero line as well. So we can see that right after that happened, you can see that the price reacted. As you can see that the price of the asset was selling, was going down. So we would have entered the sell position right after this crossover of the line below the zero line and the histogram bar is beginning to form at the negative region, right? Enter a sell around here, set stop loss somewhere above the swing low, just above the swing low. And then our take profit could have been around the support level, somewhere around here, or would have waited for the MACD line to begin to curve upward. That would have been an exit signal. So somewhere around here. If we had done that, we would have caught somewhere around 37 pips, right? Somewhere around 37 pips. Okay, so the MACD indicator is not hard to use. The signals are quite straightforward and quite easy to use. Now on the 5-minute chart, these crossover signals allows you to quickly enter or exit positions in line with short-term momentum shifts. Now we are working with a 5-minute time frame, so we're talking about momentum shifts on the 5-minute time frame, short-term momentum shift, right? And this crossovers can help you to quickly identify those momentum shifts, those price changes quickly. Okay. Now you might want to know how to avoid false signal, because there are always false signals when we're dealing with indicators. Sometimes indicators give false signals, right? So the MACD can also give false signals, especially in sideways or choppy markets. However, to reduce false signals, you might want to use the MACD in trending markets, right? So for example, in this trending market, we can see that the price was trending lower, it was a sell trend. You might want to use the MACD only during the trending market to reduce the chances of false signals, right? And then you might also want to wait for confirmations, right? You may not want to act on the very first signal that you receive from the MACD. Instead, you can wait for confirmation from other indicators. You can use other indicators for confirmation of your entries, your exit, your buy and sell trades. You can use other indicators in addition to price action for your confirmation, right? Now, in fast-moving markets, shorter MACD settings like 6, 13, just like how we used here the 6 for the fast EMA, 13 for the slow EMA, and 5 for the MACD SMA. Now these settings are ideal for the 5-minute charts. They provide quicker signals, which is critical in fast time frames. These settings give you early entry points, but are more prone to noise, right? Remember, the higher time frame, the stronger the trend and the lesser the noise, right? So when you're dealing with a 5-minute time frame, scalping on a 5-minute time frame, you are prone to see more noise, right, compared to the higher time frames. However, you can be able to catch quicker moves. Okay. Now these settings, they give you early entry points, right? So as a scalper, you might want to take advantage of these settings. Meanwhile, for better accuracy, you might want to use the MACD alongside support and resistance levels, combining MACD lines, MACD signals. You might want to combine MACD signals, the signals you receive from the indicator with key support and resistance levels. For example, let us just use a dynamic level. For example, let us use, you can see that this was a downward trend, right? Downward trend, you can see, just draw this trend line. So now, once the MACD gives us a sell signal, right? This was a sell signal, right? Here you can see that the price Okay, this was where the trend line began. So let's just look for another opportunity around here, right? So we can see that right after the MACD line crossed below the zero line, you can see that this trend line also gave us a signal because the price bounced off the trend line. So it was an indicator, it was an indication that the sell is valid, right? So in this case, we could have used the trend line as a confirmation to the sell signal that the MACD was giving us, right? Let's look for another example. Another example in a buy trend. In a buy trend, let us see. All right, this is good. Okay, let us do a trend line right about here. Okay, and now we can see that right after the, let us use this point somewhere around here, right? Okay, this is gonna work. So right after the MACD line crossed above the zero line, we can see that there was a strong bullish momentum around here, although it was below the trend line. Okay, let's look for another example. Let's see if this is going to work. These are just dynamic support and resistance levels. These are dynamic support levels. Dynamic support levels. Okay. So now we can see that right after the MACD line crossed above the zero line, you can see that the price bounced off the trend line, and even as we were having this steep slope, you can see that as price was bouncing off the trend line, we can see that the MACD line was also curving upwards. So as we see this curve of the MACD line upward, we can use the trend line as confirmation. As price bounced off the trend line, you can see it happened here again. We can see that the price continued upwards above the trend line. So the trend line can be used as extra confirmation. You can also use other indicators. Remember, you can use other indicators. You can also use your static support and resistance levels. Example, you can see that this is the static resistance level, and right about here, we can see that as the line dropped below the zero level, we can see that somewhere around there, price was rejected at this resistance level. So you can see that the resistance level serves as a confirmation signal, right? So we would have entered the sell right about here, and perhaps set our stop loss above the swing high, and as for take profit, we would have considered the next support level somewhere around here, or perhaps we would have waited for a curve on the MACD line right in the negative region, right? So as the line began to curve upwards, we would have possibly considered that as our exit signal. So we would have exited our sell trade somewhere around here. If we were using, that is, if we were using the MACD for our exit, right? But if we are using the support level, then perhaps we would have exited somewhere around here. You can see that this was a support region, right? Okay, so basically this is how it works. In order to get a more accurate signal, it's always good to use confirmations, right? It's always good to use confirmations. Moreover, you can also use the EMAs, right? You can decide to use moving averages. You can use moving averages for additional confirmation as well. You can also decide to use moving averages, right? Let's just change this to smaller since we are dealing with scalping. Okay, so you can see now that as price dropped below the moving average, you can see that was an additional confirmation, addition to what happened here, right? So it's more, it was an additional confirmation, addition to the price bouncing off the resistance. You can see that this moving average also served as a confirmation signal, right? You can also use RSI, you can use stochastic oscillators, you can use any other indicator of your choice for your confirmations, okay? So now, basically, this is how it works. Just a recap. The first thing you want to do for using MACD on the 5-minute charts, make sure that you modify the settings, as this is like one of the best settings for scalping on the 5-minute time frame. You set it to fast EMA 6, slow EMA 13, and MACD SMA 5, and then you might want to consider adding a moving average on your chart just for extra confirmation, and you can also decide to add any other indicator of your choice just for extra confirmation. And then for a bullish signal, you wait for the MACD line to cross above the zero line, and then for a bearish signal, you wait for the MACD line to cross below the zero line. Okay, and for better trades and to avoid false signals, you might want to only use the MACD indicator in trading markets. Okay, so basically by combining the MACD with other indicators and price action, you can be able to refine your strategy and make more confident trade decisions. So I hope you enjoyed this video. I hope you found it insightful. If you did, kindly like and click the notification bell and also subscribe for more trading insights. Cheers, guys, and happy trading.